Hey guys and gals, this is my weekend video and some things I want to float with you guys, some different ideas floating in the back of my head, some things I'm looking at here in the markets. And so I'm going to start out with SPY on the long-term trend here and exactly what we're doing right here. So basically, I got Andrew's pitchfork on here, and we are currently trading slightly inside the Andrew's pitchfork. We did that last week as well. We've been there for for a little bit of time here. If I zoom in here real quick here, you can see what I'm talking about. So we've been here for several days now. We broke into it last week. We're still into that area as of this week. Okay, so that's pretty much what we're doing here on SPY. Okay. And the main takeaway, first thing I'm going to talk about the Andrews pitchfork. See how where we're located on this Andrews pitchfork. Then I want to go to XLF. That's your financials ETF. Okay, pull this thing up real quick, and now look what we got going on in XLF. It basically looks exactly the same. So that suggests to me that financials are trading in tandem with the S&Ps. Okay. Well, what I had mentioned in a few bit videos back and stuff, that was the market life cycle. And that was whenever the banks were reporting earnings and stuff. And I was leaning to think that we were starting financials bearish into the late stages of the economic cycle. Okay. Well, what we're seeing right there, it's proven. I've given it a few weeks here for things to play out and stuff. We're still pretty much trading in parity with the S&Ps. Financials are not leading to the downside. They're trading in parity. So that suggests to me we're not actually in this phase of the market life cycle. We're actually further back here still into the full recovery stage of the market life cycle. So I do want to float that idea. I want to see a divergence where the financials start, uh, uh, underperforming the S&Ps. And we currently do not have that situation. So that was the first idea I did want to float to everybody here in who's watching my videos. Okay, now, next thing I want to get into here. I am going to zoom in to the action we've had just the past 2 weeks, So we closed out April. And where's that at? April, there you go. April 29th. Right there. Okay. This candle right here, the one that broke into the pitchfork, that happened on April 29th, okay? On above average volume. Well, it's end of month. You've got all the 401k money, all that type of money coming into the markets on that day. You've got a lot of rebalancing, redistribution. That by nature, being the last day of the month, should have high volume anyway. Now, I want to float another idea. We had higher volume Friday on the S. That's the XLF. I was wondering. Well, even the XLF's even proven it even more. I was actually looking on SPY. Let me do that real quick. SPY here real quick. So let me get in here and do the same thing. Basically, it's XLF's even confirming it even more to me. Okay. So basically, there you go. You got above average volume. Okay. And you even had slightly more above average volume on this past Friday, here on SPY. Okay, but but it didn't break down further. So I do want to float that idea. Okay, and then also, while I'm doing this here real quick, I am going to go on a 1 hour time frame. Okay, 60 minutes. Okay, and then we're going to zoom in real quick. Okay, and so last Friday, this was last. Let's see here. This is this Friday. We got SPY up here, right? Okay. All right. Okay. And I am going to expand this out a little bit here, guys. And I want to show you something here. So this was going to close out April. That was that last Friday. When I said it was above average volume, but it was less volume than what we had this past Friday. I want to show you the money flows were all bearish going to close out April. We had bearish money flows happening on a above average volume day, and on a significant end of month. So last week, we closed out Friday. Guess what? We stayed positive money flows the entire day. At the very, at least neutral, if not positive. Didn't turn negative at all the entire day on the money flows. Okay. Now I made my money on the short side Friday, but I timed it right to where the money flows up till about 11 o'clock, you had declining money flows coming into the market. You could technically short the markets probably up to 11 o'clock Friday. And then all of a sudden, the money flows just stabilized the market. Now, I know the price action, we had another little dip down here and stuff, but, they were coming in here. And I am making the argument they're coming in here and trying to support the markets. So I do want to float that idea. Okay. Now, okay, that's the bullish, my bullish chart here real quick. Now let me go and check this out over here real quick and show you. Where's the bearish one at? Andrew's bearish. And we're just dealing with SPY here, guys, okay? And I'm gonna put this back on the daily real quick here. Give me a second here. Okay, what we got going on here on SPY on the bearish side, okay? So here is the trend that we've been down stepping into this trend. Okay, and it's been for a while now. And as you can see, you know, uh, we are, this was your primary trend up here, and they just cannot seem to take it lower yet. So I do want to float that out yet. That doesn't mean they're not going to. And we have an indecisive candle. So, based on the money flows, the dip buyers coming in, which they didn't do that the prior Friday, that suggests that we are probably in store for a relief rally coming in first of the week. Just giving everybody that heads up. I know everybody's so bearish in the markets, and we don't know. There could be a geopolitical event that actually finally breaks the back of the market. But I do want to float this idea that this could be a scenario in store for this week. Okay, now I am showing you the cues real quick here, guys. And as you can see, this is, you know, our Andrews pitchfork, and what we did, we came right, we're back testing. See how this back tested as a major support on the trend? We came right into that Friday. So this very easily could be, we tagged it to the penny. Okay, guys, this could very easily be a bounce point for technology. So I do want to float that idea. This is a long-term trend support, possible support, long-term possible uptrend support for tech. So I do want to float that idea, exactly what we did here on a daily time frame for everybody who's not paying attention, who's been paying attention. So let's do the same comparison here on the 1 hour, and we'll check these money flows out on that real quick here. Let's see here. Zoom in here real quick. So in the heat of disaster there Friday, our money flows weren't too bad here for tech. Positive money flows there, but the prior Friday, even that prior Friday, it wasn't the end of the world on the money. Well, the money flows intraday, yeah, okay. The intraday money flows are just horrible, closing out uh, the month of April. Okay, but coming into a major, what could be potentially a major support area, there were some buy the dippers here on tech as well. So I do want to float that idea. And what was really driving the bond markets down, or the tech markets down, that was the breakdown. We have a, we broke critical support there Friday on our bond markets. But I do want to float, if I zoom right in here, okay, and we can do the same thing, 5 days, whatever like that. Friday, look at this. It wasn't until the very close that the money flows turned bearish. So I do want to float that idea as well. On a 1 hour time frame, it was the last 2 hours that the money flows actually went bearish on it. If the bonds continue to break down and go lower, of course, it's going to be bad for the entire market, in my opinion. Okay. But for the most part, in a really bearish tape on bonds, the money flows held up most of the day Friday. They were doing, they weren't trending to the downside, not until the very end of the trading session. And that's typically, remember, The bond markets close around 3:30, I think, or 2:30 Eastern. I can't remember. So this right here might have happened after the bond market actually closed. So do keep that in mind. They do close early. They don't close the same time as the regular markets. So another scenario that or a thing I want to talk about here. You see our Andrews pitchfork? We had this prior breakout zone that happened in 2018, 2019. Okay, and the trend and stuff. It's the Andrews pitchfork. We literally look where we look what we did Friday. We literally came right down into that Andrews pitchfork, and we back tested critical support for that prior breakout, in my opinion. So just keep that in mind going into this week. I think we just possibly may have tested very, very critical support. So we know if we start breaking down the first week, we know how important and how significant that situation can be in the markets. So I do want to float that idea on that. And then on the bearish side, Andrew's bearish. Okay, now I got to zoom in here on the bearish side. Okay, guys. And so basically, yeah, see how it reached down right into that Andrews pitchfork Friday? So that could be a bear trap. So I do want to float that idea, okay? So be aware of that situation. And let's go over here to the 1 hour chart, okay? And so on the 1 hour, we've got, let me zoom in here. And so we had very flat, extremely flat money flows there, so you can't really get any gauge from that. And quite, it was quite amazing here. We actually went into, yeah, we had that Friday. Yeah, okay, yeah, negative money flows that end of April trigger, just like everything was into April was negative money flows. So you can't really IWM money flows are just there wasn't really much happening at all to speak of there Friday. So some of my really critical takeaway going into next week, one will be your transports, okay? And the second will be crude oil, okay, guys? So bottom line is crude oil is in a breakout pattern. We are at 110 a barrel there Friday. Quite possibly being 120 or better this week, this coming week. So be aware of that situation. My transports, the money flows were, pretty darn bearish. I mean, they improved over the session, but yeah, you were not finding much love in your transports, and the transports are center stage for higher crude prices. So just keep that in mind going forward into this week. So that is one of my main takeaways. We got to watch the transports and the Dow underperforming possibly with the like I said, with possible pressure from the stronger uh, crude prices potentially here. So bottom line is the crude futures, like I said, I am filming this at 3:56, yeah, before the futures are actually opening here. But I am looking for us to come up back up into these ranges here. This is a prior quarter area. There's no reason to think that we're going to just crash and burn here. Just absolutely, unless they announce some sort of peace treaty or something. And if anything, overnight we're probably going to remember tomorrow is May Day. I think it's called May Day for Russia, and it's a big military celebration. Okay, so and there's talks that Putin might actually declare war against Ukraine as for a physical, so he can get more troops to participate in the onslaught. So just remember that going into that. So the news cycle seems to be quite bullish for the crude oil here. So like I said, very easily we could be coming up into the 120 area. So just be aware of that. We'd have a quarter pivot around here to 112, 113 area. That's acted as a quarterly pivot for some, for a while there. But yeah, just keep this in mind here in your trading. Quick rundown of the earnings Monday morning. Palantir, Tyson, Cody, Hilton, Lordstown. Okay, tomorrow after hours, AMC, Plug Power, Novavax, Blink, Lemonade, Palantir as Tuesday, Peloton is Tuesday. Cisco's Tuesday. That's the food Cisco, not the chip Cisco. Okay. Known as SoFi. Tuesday night. Occidental has been on a tear, guys. Uh, Wyndham. Wyndham Resorts is going to be coming out. Wednesday, Krispy Kreme, Wendy's. So you get some of the fast food joints and stuff. Wednesday after close, Walt Disney. That's the big Dow component here so far. Beyond Meat. So I think that's a worthless company. Okay, then you have Thursday. You have nothing there that I follow. How about Thursday night? Motorola, Novartis. Okay, Friday. Okay, guys, the big one, Disney. Disney's the big one for the week. Okay, guys. And also be aware the blackout period for the Fed heads is beyond us. So we probably going to have to start hearing some speeches and stuff about that. And so heads up on that. Another thing that I do want to mention too, the China internet, which is really, it's basically a falling knife scenario as far as tech goes and everything. Time cycle wise, we're due for a times up cycle here in the China internet, and we do seem to have a little bit of improvement in the money flows. So, but they are decidedly ugly. So, just heads up on that. I wouldn't want to be initiating new shorts in the China internet, but that is the really battered down area. And honestly, the global economy will take off as soon as China gets their crap together. I mean, I really think the markets could do a lot of stabilization. Okay, guys. So just keep that in mind going forward. So one of the things that's really been helping our economy, and I do want to really float this, guys, investors around the world, because what's going on with Russia and China, they have been looking for somewhere to park their money. They've been moving that money to the U.S. equities and U.S. dollar. Okay, the dollar's strong, the economy's fairly strong. Even though we've had this pullback in the markets, the dollar's strong, and the U.S. equities haven't corrected too bad yet. Okay. So my main takeaway so far, most of the inflation, I know people are seeing it at the pump and at the grocery store, but the strong dollar, we have been because of this, we have still managed to export a lot of the global damage to our trade partners in other countries. Okay. So I do want to point that out. The strong dollar has really saved us. Okay. So, and if and when we start seeing the dollar losing its appeal, I think that's probably going to be a double negative for soaring commodities. Okay. Soaring energy, and it's going to be it's going to trigger a lot of outflow coming out of U.S. equities. Okay, so just keep that in mind. I think it's going to be a double-edged sword if and when the dollar would change course from what it's done right now. I think the dollar is really keeping. I think that's one of the primary reasons why the markets haven't done outside moves, to the downside, and I think as long as we can keep close eye, make sure the bonds don't get too far out of control here, and the dollar, it still looks like a manageable reset in the market, in my opinion. Okay, so that's my ideas. Please like my video. Please leave comments below. If you're seeing stuff that I'm not seeing, I really want to hear about it and stuff. And then also, please retweet me at Gumby9662C on Twitter. Okay, and if you're not following me on Twitter, please follow me. Okay, I appreciate it. Thanks a lot.